Felix here. What really happened today in the markets that is not shown in the top stocks and the losing stocks? Well, that's what I want you to understand here. There's a really fundamental shift going on underneath the market, and the Fed's working incredibly hard to push the other way. And this is what will shape markets in the near future. Now, apologies for my disheveled appearance. Winston and I just came back from the beach. We thought we'd ride out the end of the day with a tennis ball and some waves, which was great fun. So before we get cracking, Goldman's top 25 recession buys. Have you gotten your hands on them yet? No, you haven't, because it's the first time I'm showing you it. This is what it looks like. Nope, this is not what it looks like. Why does it keep doing that to me? Yeah, every time. There we go. Here it is in all its beauty. 25 stocks. I can't say I own any of them. Obviously, there's Netflix and Etsy. I'm somewhat of a fan, though I don't own any. But yeah, did you have a look at it? Have a look at the margins, the ROIC numbers, the kind of core stuff to make you a smarter investor. So the link again is here, felixfriends.org/25. It's free, and I keep making these for you because I think it's helpful to become a better investor and to help understand what the big boys, institutions, are thinking about. If you want to truly understand what they're thinking about and how to become a better investor, well, give us a call. Give Cheryl a call. She's been working with me for over 10 years. She's a fantastic former accountant, US trained and all that, and knows exactly what I do. So give her a bell, and she will walk you through how we make you into a gold standard investor, both on the stock and the options front. So good news, if you are a homeowner or about to buy a home in the United States, mortgage rates, the 30-year rate is below, it's at 4.98 or something like that. It's below 5% again. That's obviously a positive. And why on earth is that happening? Well, have a look at a bit more of the data here, and you'll get to get a picture. The global supply chain pressure index dropped for the third month in a row. It's still fairly elevated, but you can see the trend is coming down pretty significantly. So that's easing the pressure on the global economy and also reducing inflationary pressures, right? Because supply chain is a big part of it. How long do people have to wait for stuff to arrive? Well, factory shipment delays are improving. So you want this number to be basically as high as possible. So this is good. This is bad. It's a little counterintuitive, I think, the way they display it. But you can see a very nice movement up there. I should probably pick a green pen or something for that. But you can see it's improving. Not exactly at pre-pandemic levels, but still improving very significantly. That's positive. Now, this is our options portfolio returns. Sneakily snuck in here. He did it again. 114% up so far this year. A very nice, consistent 100% plus returns. Do you know how you can learn about that? Well, there's a link down below. Here it is again, felixfriends.org/options. Take advantage of that coupon code FREEDOM. Why is it freedom? Well, it's financial freedom. Honestly, money is not everything, but it makes life a heck of a lot easier. It gives you choices. Now, what on earth is this? It's a little small, for which I apologize, but this is just the way it comes out. I was going to pick a different color pen. It's US junk spreads over treasuries. And before I hear you sniggering about that, maybe you're a little bit less, more mature than me. It's basically the difference between junk bonds and US treasuries. And when you go into an economic woeful area where people are panicking, the spread rises because people put a higher risk spread on the rubbish corporate bonds versus the allegedly reliable government bonds. And I say allegedly there because, US debt isn't on a sustainable path. Even the Fed tells us that. But that was the long-term trajectory. But suddenly, it's coming down. You see that? That means one thing. That means confidence in the economy is coming back. The bond market is going in the opposite direction. And here you can see it once again. The US 10-year yield, the higher that goes, the more we expect interest rates to go up. So when we expect interest rates to go up, this shoots up. And then when it comes down, it's because we expect interest rates and inflation to have peaked. So the market is really going against the Fed here quite aggressively. What's the Fed doing about it? They've basically got all of their talking heads out every single day. Not a day goes past where a normal human being can open a newspaper website and not come across some quotes from some Fed president or other. Fed President Mary Daly saying the hump in futures markets was misguided and officials intend to keep rates high for a while. Today, Fed President's telling us rates are going to keep rising into the first half of next year. So this little chart is quite a clever one here that's being charted. It tells you 28th of July, 1st of August, 2nd of August, 3rd, 4th of August, where the market sees the rates going. So we're kind of peaking a little later now. We're peaking sort of here, which is, call it February 2023. And each day, you can see each day the numbers are getting a bit higher. And that's the impact of Fed presidents yabbering to the media. So we were thinking, well, the end of the year, we might get away with 3.5%. Well, now it looks a little bit more like it's going to be 4%. So they're doing a good job, in a sense, the Fed presidents, by kind of pushing back. And they're having to do that because the market is going very, very much the other direction. The bond market lot are a cheeky bunch of traders who are basically calling the Fed out and saying, we know you're on holiday, we know you're in the Hamptons, we know you're eating strawberries and sipping daiquiris, and that gives away their age, doesn't it? Daiquiris, I think. And we are therefore going to take advantage of you lot being away and on a holiday. And you're going to have to do something about this because we don't believe you. And if we don't believe you, it means the stock market's going to rally. Why? Because that's what happens. When bond yields go down, the stock market rallies. So what do you buy, you wonder? Well, honestly, the best thing to do is put a bunch of what you think are good stocks into something like our stock portfolio tracker or any other tool you find out there. And then you hit the update button. And then you can see how that loads those stocks. No particular reason that these are on here. Obviously, Microsoft, Apple, and so on, Visa are pretty good stocks. And then it tells you the gross margins here. It tells you the return on equity. It tells you the debt to equity, the quick ratios. It tells you the long-term earnings per share growth and so on, institutional ownership, short ratios, and all of that. And that way you can make a pretty quick snap decision about these stocks. So you can get your hands on that at felixfriends.org/Patreon, one of the many, many benefits of our amazing, beautiful community. It's about 20 cents a day. Join us for the year. You get an extra month off as well. So it's a bargain. And it's really just because I want to spread these pieces of information and these tools for you. So come and join us. And of course, if you want to make some real money in any market, I did, how many day trades did I do today? I did 3 today, 3 yesterday. That's sort of what I haven't got a fixed number there. I look for quality rather than quantity. But, we're up solidly way, way, way over the 100% mark this year, 114 at present. And it's not a fluke. It's not one lucky trade. It's all of this. Lots and lots of little trades. You need tons of time for it? No. It's all about strategy. It really isn't about understanding what options are. Of course, it's important to know what a strangle, an iron butterfly, and all that kind of stuff is. But that's just theory, and that doesn't really help you. And a lot of people come to me and they've done a program and they've done a course somewhere, and they know the theory, they know what a put and a call is and all that stuff, but it doesn't help because they don't know what to do with it, and they don't know what to look at for in the market to tell them what to do with it, and they don't really know how to pick winning trades. So that's really what I teach you. It's strategy, and it's the strategy that I learned as a, former banker, corporate lawyer, that sort of thing, coming across some really very friendly and very successful options traders who were kind enough to take me under their wing and teach me. And that's basically what I'm doing here with this community, is teaching people, of course, not just options. We also have stocks programs, investment programs. I think that's also very important. But there is some satisfaction in making money now and making money every week and every month consistently, and then being able to take that income and, stuffing it into, a sock or something, wherever you invest. And, it's very satisfying. So I highly recommend it. Check it out, Felix Friends options. There's a coupon freedom. And seriously, if you have any questions about it whatsoever, give Cheryl a call here, felixfriends.org/call. And she's amazing. She's worked with me for more than 10 years, and it's brilliant. And it'll walk you exactly through it. I look like a midget now, don't I? Looking over this, I look very, very short, with wet hair, still dripping slightly. You should see Winston. He brought home basically the whole beach, seaweed mostly. So he looks completely disheveled, and he's probably in my bed as we speak, soaking it through. All right. Thank you very much for watching. Thanks for tuning in. I wish you a beautiful evening, and hope to see you on the next one.